PayPal's stock is on fire, and it's about to get even hotter. In the past few months, we've seen a significant surge in PayPal's share price, but that's just the beginning. Today, we'll dive into why PayPal is poised for a major breakthrough that could send its stock soaring. I've analyzed PayPal's financials, studying market trends, and even examining the new CEO's track record. What I've uncovered will change how you view this fintech giant. From its global dominance to its untapped data potential, PayPal's future looks brighter than ever. Let's break it down. PayPal's game-changing move was bringing in Alex Chriss as their new CEO last year. This guy's not just another suit. He's a tech visionary from Intuit, with a track record of driving growth. Chris hit the ground running, laying out clear priorities for 2024 that have investors buzzing. He's laser-focused on three key areas: ramping up PayPal's branded checkout business, boosting overall profitability, and leveraging the company's massive data treasure trove. Chris understands that PayPal's strength lies in its two-sided network of merchants and consumers. He's not just maintaining the status quo, he's pushing for innovation that could revolutionize how we think about digital payments. With Chris at the helm, PayPal isn't just adapting to the fintech landscape, it's aiming to reshape it entirely. Now, let's talk about PayPal's massive global footprint. Anyone who says PayPal is dead is living under a rock. This isn't just another payment app, it's a financial powerhouse used by millions worldwide. From New York to New Delhi, PayPal is the go-to for online transactions. Its user base is staggering, with a presence in over 200 countries and regions. Think about it. When was the last time you shopped online without seeing that familiar PayPal button? While user growth has slowed recently, PayPal's focusing on something even more valuable: getting existing users to transact more. They're not just chasing new signups, they're making their current users more active and profitable. This strategy is paying off big time, driving up transactions per active account and boosting revenue. In the digital payment world, PayPal isn't just playing the game, it's dominating the field. Let's dive into the numbers, because they tell a story that's got Wall Street sitting up and taking notice. PayPal's recent financial performance? It's nothing short of impressive. We're talking about an 8% year-over-year revenue growth. That might not sound earth-shattering, but in the current economic climate, it's a big deal. But here's where it gets really interesting. PayPal isn't just growing, it's becoming more profitable. They've managed to widen their profit margins, which is like squeezing more juice from the same orange. This isn't just about making more money, it's about making money more efficiently. And the future? It's looking bright. Analysts are projecting continued growth for PayPal. They're not resting on their laurels. They're pushing forward, innovating, and finding new ways to monetize their massive user base. Remember, this is a company that processes millions of transactions daily. Each of those transactions is a revenue opportunity, and PayPal is getting better at capitalizing on them. With their strong financial foundation and growing profitability, PayPal is positioning itself not just for survival, but for dominance in the fintech space. Now, let's talk about PayPal's secret weapon: data. We're not just talking about numbers in a spreadsheet. We're talking about a goldmine of consumer insights. Every transaction, every click, every purchase, it's all valuable information. And PayPal? They're sitting on a mountain of it. But here's the kicker. They're about to use this data in a way that could revolutionize e-commerce. Imagine getting personalized receipts after each purchase, with product recommendations tailored just for you. It's not just convenient, it's a game changer for increasing sales. This isn't some far-off dream, it's happening now. PayPal's using artificial intelligence to analyze spending patterns and predict what you might want to buy next. For merchants, this means more sales. For PayPal, it means more transactions and more revenue. But it doesn't stop there. This data is also helping PayPal refine its fraud detection, making transactions safer and smoother. In the world of digital payments, data is king. And PayPal? They're wearing the crown. Let's talk about how PayPal is putting its money where its mouth is. And by that, I mean right back into investors' pockets. PayPal's been on a share buyback spree, and it's not slowing down. They've already repurchased a whopping $5 billion worth of shares, and they're committed to buying back even more. Why does this matter? Well, when a company buys back its own shares, it's like slicing a pie into fewer pieces. Each remaining slice gets bigger. In other words, your stake in the company becomes more valuable. But it's not just about buybacks. PayPal's also focusing on increasing its free cash flow. That's the money left over after all the bills are paid, and it's a key indicator of a company's financial health. More free cash flow means more flexibility to invest in growth, pay down debt, or return value to shareholders. It's a clear signal that PayPal isn't just confident about its present, it's bullish on its future. Now, let's put all the pieces together and see why PayPal is on the verge of a major breakthrough. We've got a new, visionary CEO with a clear strategy, a global user base that's becoming more active and profitable, impressive financial growth, and wider profit margins. And let's not forget that gold mine of data they're just starting to tap into. But here's the real kicker. PayPal's positioned perfectly for the digital payment revolution. As more commerce moves online, especially in emerging markets, PayPal stands to benefit enormously. They're not just riding the wave, they're helping to create it. With their focus on innovation and user experience, PayPal is set to capture an even larger share of the digital payment market. And remember those share buybacks? They're a clear sign that the company believes in its own potential. But here's something crucial to consider. How will PayPal's breakthrough fit into the larger economic picture? In my previous video, How Much Time Do We Have Until the Big Crash? Zrania, I broke down the 3 critical indicators pointing to a potential market downturn. Understanding these signals could be key to maximizing your gains from PayPal's growth while protecting your overall portfolio. If you haven't watched it yet, I highly recommend checking it out next. The strategies I discuss for navigating uncertain economic times could be invaluable for any investor, especially when considering high-potential stocks like PayPal. Don't miss out on this critical information. Your financial future could depend on it.